Hello, and welcome to another episode of the Seasonal Tokens Podcast, where Polar interviews people so you can do more investing and less gambling.
I'm wondering, during all this time of investments in crypto and I suppose mainly Bitcoin, are there any costly mistakes that you have been doing as a crypto investor?
I'd definitely say in my early years, I was enticed by trading. And I have friends that do trading and they do it quite well. They use pretty sophisticated software and they're really good at market analysis and things like that, or technical analysis. I'm not good at technical analysis at all by any stretch. I'm pretty good at fundamental analysis. And so fundamental analysis, if you were to ask the question of what's the difference in terms of investing between fundamental analysis and technical analysis, I'd say technical analysis can probably give you, if you're really clued into it, better short-term understanding of the market, where fundamental analysis probably isn't going to help you too much in the short term, but it's great for long-term predictions. So when I've tried to do the short-term thing, it's just never worked out for me. The only time I've ever lost money in crypto is by trying to trade. It seems what happens, and I think this is for a lot of people that are new to the market, they say, wow, okay, so let's say, Bitcoin's the coin we're talking about. Bitcoin went up to 20,000. Now it went back down to 18,000. Now it went back up to 20,000. And you see that happen a few times and you just say to yourself, well, gosh, it's going to do it again. So why don't I just bet on that happening? And then, of course, what are the markets? The markets are psychology. They're psychological. So if you're thinking that, there's a good chance that other people are thinking that. What makes the difference between good short-term traders and bad short-term traders like me is that I'm going with the crowd, where good short-term traders have trained themselves and they're using tools to be able to think counter to the general psychology of the market. And even then, there's still a lot of people that don't do it well. So I would just be careful with trading. You have to be really, really sharp with what you're doing. That's not something that I'm particularly good at. Because I study fundamental analysis, I'm pretty slow to invest in a new project. But when I do invest in a new project, over time, they've pretty consistently, almost 100%, have done well from the time that I invest in them to even right now in a market crash. My portfolio is up very substantially from where it was several years ago because I've always invested with a long-term arc. So it allows me to withstand, market downturns and things like that. It's kind of a bummer because yes, my portfolio is lower than it was, say, a year ago, but my portfolio is still much higher than it was, say, 3 years ago. And so, yeah, it's just time frames can mess with you a little bit, but that's been my strength is long term. My weakness is definitely short term.
So if I understand you right, you are saying that your main and only mistake as a crypto investor was or has been doing day trading, not doing like long-term investing.
I mean, that's probably my biggest mistakes. I'm sure I've made plenty of mistakes. I think that'd be pretty arrogant to say that I haven't. I think there's probably projects early on in my career that I invested in without having done proper due diligence. I think that a lot of these things that as I've grown and matured in the market, some of it is trial and error, that sort of thing. But yeah, I think that's probably the biggest mistake is the day trading side of it. Yeah.
Okay, great. So that's really nice. And I'm sure that, like I said, you have learned a lot as a trader and long-term investor. But if you have to give only one advice to the younger version of Brian, what this advice would be about crypto investing?
I would say to keep your emotion at the door. It would just have to be to take the emotionality out of it. Because if we allow our emotions to drive our decisions, we're going to almost always make the wrong decision if we're investing emotionally. And so, and like I said, I think even early on with Bitcoin in particular, I had really long-term convictions from the time I bought Bitcoin in the first place, but I allowed myself to stay up at night worrying about the market if my portfolio was down. So it wasn't necessarily that I made a ton of bad decisions with my portfolio, but it also eats away at you a little bit. And so you can't live life like that. If you're going to be an investor from now until the time you retire, or even beyond the time you retire, because then your retirement is probably your investment account. That's what you're living off of. You cannot allow the daily fluctuations or even the yearly fluctuations to affect that. If you're only bought into things that you have deep conviction in, then it should allow you to rest a little bit easier at night and to tell yourself, it's sometimes you need to I would probably give myself permission to say, hey, it's okay not to sweat this right now. It's okay not to worry about this. Because sometimes we think that we have to worry. Like our worry is what's going to make us make the right decision. And it's the exact opposite. It's the exact opposite. We need to sometimes let go. We need to sometimes take the emotionality out of it in order to make good, clear decisions.
Great. I totally agree with you that emotions are something that are affecting our decisions, not only in investing, but in everything in life. Also, in a not very good way.
Yeah.
And if we allow them to affect our decisions in full, like in most of the cases, we make the wrong decision.
Yeah. And even when the market's up, and that even goes true. Like right now, we're talking through the perspective of a down market. It's really easy to feel like an idiot, or like you made the wrong decisions, or did I waste my time and my energy? When the market goes the other way, when you're on cloud 9 and your portfolio is up 1,000%, also don't think that you're a genius. Have a balanced perspective. Don't be in total euphoria and think that the market's only going to go up and that you're only going to get richer and richer, because then the crash from that is also going to feel detrimental. So there's a great saying, and I love the saying. I don't think I quoted it in the book, but I probably should have. Things are never as bad as they seem, and they're never as good as they seem. They're somewhere in the middle. And so just making sure on both ends of the spectrum that we're kind of in check. And it doesn't mean that we should be down on ourselves when things are good, but it's just not to be like too cocky, too arrogant. Arrogance is also detrimental in the same way that anxiety can be detrimental.
Absolutely. And it really hurts when you are falling from a very high. So being realistic about the situation is definitely a good solution and option to survive and live longer. So we have been talking a lot about investing, but I suppose we have a lot of listeners that are right now joining crypto or are going to join crypto soon and things like that. But they are wondering how or what is the best way for them to learn more about crypto investing. What is your take about that?
Well, I mean, I'm going to pitch my book again on this one because I have an entire section about that. Sorry, I was trying to think of an answer that didn't come back to that. So if you're asking me, I wrote down all of my thoughts. It's in the book, Bitcoin Evangelism. There's an entire section. It's literally called Digital Asset Investing Principles. And I walk through a process. And here's the thing. The thing I say at the beginning of the chapter is, here's my process. And you can choose to do this process. I know people that have a similar process. I know people that have a different process. The thing that you need, whether you use mine or not, is that you have a process. You need to instill discipline into your investing. And so if your investing doesn't have principles, like if you don't say, I'm going to invest consistently, if you, like we talked about earlier, if we just invest emotionally. So am I just going to, like, every time I get $1,000 in my bank account, I'm just going to buy $1,000 of whatever crypto I feel like at that time? And whatever my friend at school or whatever my friend at work just happened to mention that day, like, that's not a good way. That's a very lazy way. You can see the difference in a life that is filled with discipline. And I'm not just talking about crypto right now. I'm talking about life in general. Look at the people that you know that are healthy. Look at the people that you know that are vibrant. Now, nobody's perfect, but they have a level of discipline that goes throughout their life, right? They're not staying up all night playing video games every night. They're not up, eating just terrible food constantly. They're not, just destroying relationships. They're being disciplined in many areas of their life. A lot of times that stuff translates over to good investing. If you can wake up in the morning and make your bed, if you can wake up in the morning and get things done and be productive, start off by creating disciplines in your life in other areas. And if you can create discipline in your life in general, then you can carry that over into investing. So I would say a holistic, healthy life is probably one of the most underrated things in investing, is that, good discipline, holistic, healthy living in a general sense is a good way to start off as an investor.